Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of May 4th, 2015. Hello, I'm John Thomas with Primary Residential Mortgage to give you an update. Well, last week was not kind to Delaware mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage bonds have been selling off and they've broken the short-term trend of moving higher. They broke out of that trading trend we talked about the other week, and they've broken out lower, which is bad news for mortgage rates because mortgage rates have moved higher over the last week. You can see the blue line there. The short-term trend is for bonds to sell off. And with the red candle on Friday, we're going to recommend locking your Delaware mortgage rate to start the week because the short-term trend is they could fall further and move rates higher. So lock your Delaware mortgage rate to start the week. Now in economic news, big report last week was gross domestic product. The first reading of the first quarter of 2015 came out at 0.2%. Well below expectations and down from 2.2% from the fourth quarter of 2014. So that was a very disappointing report on gross domestic product. Definitely shows that the economy is starting to weaken. The whole report, everything was weak. Consumer spending dropped from 4.4% last quarter to only 1.9%. And consumer spending is a big driver of the economy. And then they have also revealed that due to falling oil prices, investment in mining, exploration, shafts, wells, for example, all plummeted by 48%. So the low price of oil is hurting us economically with jobs and oil energy related sectors. So we'll have to keep an eye on that. Then we had weak initial jobless claims come out on Thursday. They came out better than expected, and it was the best reading in 15 years. 262,000 claims. That was a drop of 34,000 claims from the previous week. So some conflicting news there. Great jobs report, but bad GDP. So we're going to have to see how this plays out because that was some conflicting economic news. And then the Fed's favorite measure of inflation was the PCE, or the personal consumption expenditure. Showed tepid signs of inflation, being only 0.2% and 1.3% year over year. So that's well below the Fed's target rate of 2%. And that leads us to believe the Feds will not be raising short-term interest rates anytime soon, especially not in June, which have been hinted at before, because without the data coming in with inflation, they can't afford to pull back. And then in housing news, Case-Shiller 20-City Home Price Index for February came out. It increased year over year by 5% from February 2014. That's the fastest rate of annual growth in the last 6 months, and home prices are up 0.5% from January to February. And then we saw pending home sales for March 2015. They were up 1.1% from February, and they're up a whopping 11.1% year over year from March 2014. Now, pending home sales is a measure of the number of contracts on existing homes that are for sale. So that's great news in the housing front. Huge rebound in housing. We're looking for a hot spring market into a hot summer market. We've got low inventories that's putting price pressure, so home prices are going to go up. So don't wait, get out there and buy, and don't be too aggressive on your pricing strategy or you might get knocked out of the market by someone that's bidding full price. Now in the local news, USDA is underwriting files that were submitted on April 23rd as of Friday, May 1st. So please plan accordingly for that because that would be add an extra, I would say, 2 weeks to your closing to be safe for a USDA loan. And then the next free first-time homebuyer seminar is Saturday, May 30th. That is in Newark, Delaware at the Christian Hilton Hotel from 10 a.m. to noon. You can register for that event by giving us a call in the office, 302-703-0727, or apply online, register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.